Hey guys, I just came back from a run and I wanted to make a really quick informal video about two popular stocks that I am lucky enough to own and I have high hopes for. The first one is iQiyi. It stands for iQiyi. Now, this company used to be owned by Baidu and is still partially owned by Baidu. And iQiyi is referred to as the Netflix of China. This is a very, very fast growing company. Last quarter, their revenues grew at 62%. So they are kind of like a hybrid of YouTube and Netflix. It's not quite like Netflix, but they are very fast. They have about $3 billion in revenue, which is, I believe, a quarter of the revenue that Netflix has, give or take. But they are faster growing. Their content is almost 100% Chinese, but there is some other stuff, and they are trying to grow internationally a little bit. So I own this stock. I bought it at 18. Currently, it's at 42. I just kind of looked at the TV to see if it was going by right now. But this is a very exciting stock. I don't know if I'd recommend it, but I'm not selling my shares. Netflix is like a $140 billion company, and I see no reason why iQiyi can't be a $140 billion company in the next few years. So I'm not trying to make money today. I'm not trying to make money next week on it, but I am trying to make money long term. I think I've just been lucky that I'm up like 130% on it right now. So iQiyi, everyone's talking about it. It's the hot stock. So if you don't have some, I don't know if you should buy some now, but it can't hurt to just buy a couple of shares just so you have something to root for. So the next stock I want to talk about is JD. It stands for JD.com. So the interesting thing that happened is Google just invested or plans to invest $550 million into this company. This is a company that is nowhere near worth a $100 billion valuation yet. It's probably in the 30s, 40s, 50s, 60s, depending on what the stock price is at. So it's about halfway there. But this is kind of known as the second biggest e-commerce company in China, second to Alibaba. And I've heard people say, and I've heard people write that I've never personally used JD.com. I've never bought anything on the site, so I can't tell you. But I do own call spread, so that's why I'm talking about it. JD is more similar to Amazon, I've heard, than Alibaba. And that's because JD takes care of everything. I've very frequently heard logistics in the conversations about JD, that they're more like a from beginning to end type of company, meaning that you can purchase stuff directly from JD. They figure out a way to get it delivered to you. And as opposed to a company like eBay, where eBay is not actually selling you the goods, they are just kind of a middleman, and they take a cut off the top. They take so if someone sells something for $100, eBay might get $10 or $7 of that, depending on the terms that you have set with eBay. So JD is so interesting, and I think this is a stock that can absolutely go to. Now, I'm not making a prediction for this week or this month, but I think this is a stock that can absolutely go to $100 billion market cap, similar to a market cap of something like Baidu, which is the dominant search engine. And they are growing very, very fast. JD is growing revenues. I think their last quarter was something like 30%. But because of this deal with Google, now Google is only buying about 1% of their shares. But Google, of course, everyone knows, is going to be a very, very strong partner for them. So, who knows? Maybe JD might be selling some of their stuff through the Google website. So Google is a very strong partner, and maybe they can actually accelerate revenues. Maybe they can get these revenue growth numbers up above the 30s. Maybe they can go to the 40s or 50s like Alibaba. Who knows? But I just wanted to bring your attention to these two very, very exciting Chinese stocks. They seem to be hot topics, and I've done well with them so far, and I am continuing to hold for the long term. Thanks for watching, guys. Subscribe and like.